I am so sorry. I just realized that I was on mute. Anyway, so I can still say, hello and welcome everybody to the podcast Tokenization, the new Phenom. The idea about this podcast is to educate the Indian investors and the investor community as a whole on real value of tokenization, right? So we're going to talk a lot about, how fractional ownership, tokenization, REITs, how all of that add to this particular format of tokenization, right? So I'm going to have a co-host as well. So let me introduce him. So we have Ashank, who has been building the REIT real estate entry tokenizer community to connect with the leading entrepreneurs among people of Bharat who have developed the core or ancillary support solutions for enabling real estate tokenization. Today, a lot of Indian founders who are leveraging Web3 democratization of real estates within or outside of India are honorary members of the REIT community. Ashank is the managing director of Bhuvanijyak Consultancy Services, which serve the needs of principals, agents, investors, customers, and partners seeking dharmic real estate solutions. Right. He is actively building a platform for planning dharmic elderly housing solutions, which is a very noble cause for people of Bharat. In addition, he is researching in Bennett University on philosophy of real estate economics with focus on elderly through lens of dharma. Ashank is a graduate of IIT Kanpur and IIM Calcutta. He has worked in Royal Dutch Shell before embarking his 40,000 kilometer, wonder for exploring 600 plus ancient dharmic sites throughout the land of Bharat and Sri Lanka. So, all right. So let me just go ahead and welcome Ashank. Hi, Ashank.
Hi Alec, and many thanks for that wonderful introduction.
Thank you so much, man. You've done some great work. So about me, my name is Alek. I am the founder of a company called Animo Solution, which is a Web3 focused design development agency. I'm a public speaker. I teach as a guest faculty at NIFT, and I also run another podcast called The Future of Web. All right, so enough about me. Let's go ahead and quickly introduce our guest. We have a lot of things to talk about. So let me just introduce our guest, Siddu Kadi, who is a founder and CEO of Three Blocks Inc. He has 14 years of experience in core and retail banking. Sidhu has been in the real estate syndicator since 2018. He was first exposed to Bitcoin and crypto in 2016, and since then he has been a Bull on decentralization and asset tokenization. At the end of 2021, he decided to plunge into asset tokenization and started Three Blocks. So, without further ado, let's go ahead and welcome him. Hello, Sidhu.
Hey, thanks a lot, Alec, for giving me this opportunity and a great introduction. Thank you.
Oh, pleasure is all ours. So yeah. So I think let's just quickly try and understand. Who is Sidhu, right? So we know, you moved to US for some work, and then you ended up starting this uh, tokenization for real estate solutions. So can you share a little bit about your journey?
Yeah, so back in 2008, when I just finished my engineering, I started working for banks, and I got a chance to uh, move to US in 2011 while I was working for a bank, and then since then I've worked for a couple of banks, major banks, mainly JP Morgan Chase and Bank of America, and I was part of retail banking and core banking, mainly SAP Ledger as well as Oracle Ledgers. And in 2018, I moved to Tampa. I met good friends, and then Tampa is being one of the Airbnb red hot zone. We decided to buy a couple of properties through syndication, and that's when I entered into syndication. And it's been a really wonderful journey so far. It's been around five plus years being in real estate syndication, mainly in Airbnbs.
Fantastic. I think that's a very good, I would say natural progression, right? Because of interest and because of, you already were into technology, right, Ashank? So, okay, let's
Yeah,
go ahead,
but
Ashank.
US
What do
has
you
been
have?
the hot verb of all these real estate tokenization platforms. Rather, last year there was a global real estate innovation survey in which there were like more than 40 startups from US primarily into real estate tokenization. Like, what's the big deal? What's the gold rush out there?
Yeah, so US real estate is one of the best performing asset classes in the world. If you
Hmm.
compare rental income, if you compare the year-over-year growth in the asset prices, US has been the leader since 1980, 1990, I would say. And syndication is traditionally heavy in US. There are thousands of syndication companies in US, be it be multifamily storage units, or single family built to rent. So syndication, the legal structure is such a way that people are able to do syndication between accredited investors, sophisticated investors. So it's a huge industry in US, unlike in India, where everybody is supposed to take a loan to buy a real estate, and then the companies who are supposed to building these multifamily, for example, Prestige in India, they
Hmm.
raise money from lot of money from retail itself as part of the loans. But in US, the Prestige can raise from many other ventures and then bring that building to life, and then the loan can be issued after the fact the building is already built out. So it's little different than how it works in India and US. So US is one of the best market. We compared all the rent rolls across various markets, be Europe, Australia, India, China. The rent roll in US is really good, well over 10, 12, 14% cash on cash return. So I think that's one of the reasons you see a lot of companies in US doing tokenization.
Interesting.
Interesting.
Yeah. So from a very basic point of view, what I understand is that, say, when you take a loan here, right, and so on a loan, you obviously you have to pay an EMI, and especially if you take it as a rental property, right. So your EMI's cost is higher than the rental income that you have, irrespective where you buy, right. It's proportionally that way. In US, is the reverse. So you
Exactly.
buy, right, and that's the reason, why you hear a lot of people. I mean, before tokenization took off, a lot of people investing heavily, especially Indians, in property, because the only thing that they had to sum up was the initial amount, to buy the property. That's the EMIs kind of were taken care of with the rental income.
That's true. In terms of single family, any individual can get a loan with 5-10% down for a
Hmm.
30-year mortgage. For multifamilies, banks also give up to 50% a loan, 50-60%. So that's one of the best avenues to raise funds, and then only general partners are able to go out and raise another 30-40% from the accredited investors. So the return over the loan is pretty good. Cash flow is pretty good.
Interesting. Cool.
Rather, that brings to a very interesting question, because when we go through your white paper, we come across a term as under collateralized DeFi loan, a very, very heavy jargon which bulk of our investor community, bulk of our audience won't understand to the really depth of it. So, can you please explain the nuances of it?
Okay, so before we go deep into the DeFi, how the traditional real estate works, right? So in traditional real estate, I go to bank, I put my 10% down, and 90% I take it from the bank. So first lien on the property is still the bank, right? So bank owns 100% of the property until I pay all the mortgage. So I'm bank is giving me under collateralized loan because real estate itself is a collateral. In terms of DeFi, the DeFi real estate tokens we are selling as on the Polygon network. So in DeFi, we do not have a credit score. We do not know who is borrowing, right? So a lot of the things are by the wallet itself. So in this case, when we talk about under collateralized loans, there are millions of people around the world who have Bitcoin, Ethereum in their wallets, and
Hmm.
most likely these are sitting idle with yielding zero interest. So we are enabling these people to bring their Bitcoin and Ethereum, who are the pristine assets for collateralization. So they can collateralize these assets and take a loan against these assets and invest those into real estate token. So as I said earlier, bank itself owns the house. In this case, the lender who is lending against the Bitcoin, they have a first right on the real estate token if the mortgage is not paid back or a loan is not paid back. So under collateralized loan works in such a way that even if I have one Bitcoin, I can leverage it up to 1x or 2x and buy the real estate token. But the lender who is lending me money, he has a first right on the Bitcoin as well as real estate. So the lender is not really at a at a problem because he has over collateralized assets, uh, technically, but visually, when you look at it as a borrower, I'm really doing under collateralized loan. So borrower and both lender and borrower are actually in a place where they are able to uh, gain yield with lesser risks.
Now, this is uh, when the banks are involved in this whole loan giving process, they also have a simultaneous loan recovery process, very much with the mandate of the law. Or in a crude word in India, we call it as vasuli.
Hmm. Hmm.
In this case of DeFi, where there are these disconnected global lenders who have just given on the basis of the wallet to wallet exchange, suppose the other party is just defaulting on it, how are they going to recover it?
Exactly. So this is built on a smart contract. There is no human intervention. The friction
Mhm.
is very less. If you go back to traditional way, if I default on my loan, I get first notice, second notice, third notice, and then evacuation notice, then court case. It is like 3 months to 6 months to 9 month process,
Mhm.
right? So it requires a lot of capital. It requires human energy. But in terms of DeFi, it is purely code. If I don't pay my loan, my Bitcoin gets liquidated first automatically without anyone involved, and then the money is paid back to the lender. And if I'm continuously paying my loan obligations, then no liquidation happens. So this is the next step in terms of lending and borrowing, where human intervention is removed and human emotions are removed. It is purely based on the code. If I don't pay the loan, my assets are liquidated, and the lender is also safe. And the company who is facilitating this transaction is also not directly involved. It is the code that is doing everything. So the codes are getting audited by various auditing firms. So the best way is moving from traditional way to DeFi is the right thing to do, because in traditional way there is a lot of human intervention, and then the time to get that loan back is huge, and the time lost is actually money lost. So in DeFi it all happens under seconds, and even the borrower has only one thing to do, that is pay back the loan. Otherwise you lose the collateral immediately.
But just to begin with, here a person is supposed to have those bitcoins, etc., which are to be given as a collateral. Why he would even go for a loan if he had so much liquid instrument like Bitcoin to begin with?
Yeah, so they have a bit liquid Bitcoin, and how we grow our wealth in the fiat world, or in the real estate world. Mainly leverage is something which is important. Okay, good leverage is important, bad leverage is bad, right? So people taking 100x, 200x, 50x leverage is really bad. But if you have the good leverage, 1x or 2x, that is good. So I don't have to sell my Bitcoin to grow my wealth. I can leverage my Bitcoin to grow my wealth. So that's the best part. If I have two Bitcoins, if I sold it, that's, let us say, in today's price 28,000, we are talking about around $56,000. If I sold it, I'm paying 30% taxes to buy a real estate. Instead, I can leverage that $56,000 worth Bitcoin and take a loan and invest in real estate. Now I did not sell my Bitcoin while accumulating real estate. So my whole wealth is increasing and my cash flow is increasing.
Okay, that's a very interesting use case of Bitcoin I never thought of.
Yeah,
Yeah, so it's like you kind of circulate it within the economy as long as everything is on blockchain, right? And in
right.
the same ecosystem, be it
Mhm.
Ethereum or Bitcoin.
Yeah, now we have cross chains and we have WBTC wrapped Bitcoin
Yeah, yeah.
moving around all the chains, Ethereum, Polygon, Avalanche, whatever, right? So even we have wrapped Ethereum across various chains. So these are the pristine assets, like nobody controls them. There are limited number of supply. Nobody can
Yeah.
overinflate these assets. So that's the best way to use these assets to leverage them and increase the wealth.
Ooh, interesting. That's a very good way. So I think let's move on to the next question. Like just try and understand. We have a lot to understand from you because you come from a very, very different world of tokenization and how it's done there. So the question is like, in the market like US, where fractional ownership in real estate has been, how do I say it, uh, adopted very fairly and very fast, right? So how do you see that happening here, and like how does it work as compared, you know, I mean, how do you say that it is helping users to increase the real estate purchasing power to some extent, right? Uh, Apart from just the things that you told about Bitcoin and under collateralizing stuff like that, how does that work?
Yeah, so tokenization also brings one of the best feature, that is fractionalization. So if I wanted to own a house in traditional world, I have to go to a bank and then I should have minimum 10% or 5%. If I'm talking about $500,000 house, I should have $50,000 available with me to get that loan.
Yeah,
And then, and that is not the case with millions of people around the world.
yeah,
And using tokenization, people can invest as low as $50. We are even working towards bringing that entry price to $1 per token. So anybody in the world, it doesn't matter whether you are in US, Canada, Nigeria, Argentina, Kenya, your buying power should be able to get at least few tokens in a given real estate without having to prove that I have a 750 or more credit score, without having to have 50 60,000 dollars in my account. So entry barrier is removed, and anybody is able to access the real estate and save in real estate for the future generations, their kids, grandkids. They can keep this real estate forever, right? So the real estate usually has a lifespan of 200 300 years if it is built really well. So they can pass on this pass on this wealth to their grandkids as well.
Very interesting point, Sidhu, that yes, real estate is actually a generational asset. And if Bitcoin is built up for more than a century, then definitely real estate tokens are also not looking for anything less than 2 centuries.
Yeah, yeah. And fractionalization also brings the borderless aspect, right? So anybody around the world can open their crypto wallet and connect to our platform and then invest. So previously, if I wanted to invest in US from India, it would take 2 3 months. I have to find a lawyer, I have to find a broker, I have to first find a real estate, and also there are various other things. I have to have a bank account. There are 100 other legal stuff I have to finish first before even getting into a real estate. So this with our platform, anybody can invest within 15 minutes. Just complete the KYC, complete your wallet address whitelisting, and we validate the wallet is good, it is not sanctioned, and all that. We make sure we are following the OFSC and all those compliance. And people can invest within 10 15 minutes and save every month, save like $2 3 in real estate, and see the magic happen over the time.
So, Sidhu, now you have been talking about fractional ownership, but I understand in Indian context it's fairly new fractional ownership of real estates. We haven't yet it established as an industry as a whole. But in US, since 1960s, REITs have been in place, and from what I understand, 90% of its commercial market is actually REIT based, which is a way of collectively owning a real estate. So, what's such a big deal about tokenization coming here to facilitate the fractional ownership?
Yeah, so there are two different instruments in US, right? One is REIT and one is syndication. REIT gives you a standard 8 10% cash on cash return. It does not give you the ownership in the underlying asset. You cannot take a leverage against that. You cannot take a loan against your REIT saying, hey, I own $100,000 worth REIT, give me a loan, right? That interoperability between the bank as well as REIT provider does not exist. And
Hmm.
in REIT, underlying asset is not even owned by the investor. It is owned by the REIT provider. They give you a cash on cash return. But in syndication, yeah, it is owned by me fractionally. But again, interoperability does not exist. Even if I invested $100,000 in a $1 million house, I personally cannot go out and take a loan against it. I have to work with all the other investors. I have to work with the syndicator and ask them, hey, I need a loan, or I need to trade this or sell this. But that is not the case with Web3 and tokenization. The way we are implementing this is individual has his own right when to sell, when to leverage, and when to trade it between the whitelisted wallets. So that freedom uh, cannot be provided with traditional system because they are not interoperable. And being on blockchain, all the tokens are interoperable across insurance protocols, lending, borrowing protocols, as well as trading protocols. So that way, tokenization and fractionalization brings in much more efficiency to this market.
I like that's a very interesting point which Sidhu is mentioning, and I think this is a major point which we should re-emphasize with the viewers that here we are not just talking about enhanced technology-based experience. We are actually talking fundamentals of finance being changed, where there's a independent choice given to that investor, where he can leverage that particular fractional ownership for loans. Now that is genuinely a pure financial innovation.
Yeah,
Yes, absolutely.
leverage as well as exit. A lot of the syndication have a 5 year exit plan. Once you invest, most likely you are in that investment for 5 years, right? But not everybody is on the same page. Sometimes some emergency happens in the family or some other reason. I need my money. So exit should not be locked in. Exit should be a choice for a user so that they can exit at any point of time, and that's when the platform comes in pictures like OpenSea or a Blur, where our NFTs can be auctioned. If I have invested 100,000 in a real estate, I can put it for a sale, and anybody else who is interested to earn that 8-10%, they can buy at any point, and then I am free to go.
Interesting.
Interesting. So I have a question here. So see, because it has made everything easy. So if we do a little comparison between, we all know the downturn of 2020, 2008, 9, with the US housing crisis, right? So if, like a hypothetical situation, if you were to use blockchain and, and these real estate investments at that point in time, do you think that could have been avoided to some extent? Or is it like, any way benefiting now? We obviously can't undo what has happened, but is it in a way, protecting the investors from that sort of issue?
Yeah, so in 2008, mainly the leverage was market was overly leveraged. People even with 500, 300, 400 credit score were given a loan, and they did not even have a sufficient income to pay back that loan, right? So that's one of the bubble that popped out. But on the blockchain, as we discussed earlier, either you buy whole token with your cash or buy against collateral. There is no credit score. Okay, I am a credit worthy, give me a credit. It doesn't work that way. Do you bring anything to the table? Do you bring asset to the table? So when I am bringing asset to the table, we are reducing the risk of hyper bubbling the whole asset class. So
But
that
that also
way,
means that loans can be given only to those who are bringing assets on table.
yeah, right. So that's exactly how we want to do it, because as we know, in blockchain we do not have credit score defined yet, and anybody
Hmm.
can spin up a wallet anytime. I have 20 wallets, you may have 20 wallets. So how do you define, okay, this wallet is credit worthy and this is not credit worthy? So credit worthiness is something we can only do in fiat world, where I'm linked with social security and my bank accounts and all that stuff. So in blockchain it is really tough at this moment, but there are few protocols who are trying to build that credit worthiness against a wallet. So it's starting point. I don't know how far it will go and how well it will go. Let us see.
So another way to interpret your answer is that fundamentals of banking will remain the same because the credit worthiness check remains a very core function of banking, and blockchain system is nowhere about to replace that.
Correct. Actually, credit worthiness is something we cannot replace at this point of at this
Hmm.
point of time on the blockchain now.
And
That's
I
why
think,
we suggest to bring the assets as a collateral, and then real estate you can buy real estate. So that's a win-win for lender, borrower, as well as the protocol like us. We are not putting anyone at risk.
yeah,
Hmm.
and I think we should not change the rules of the game as long as the basics are intact, right? In terms of having collateral or having some credit worthiness, it should make things easier. I think the challenge with the current probably some system is that it's a time consuming process, right? And it's like we had saw in that crisis, it was over collateralized or over leveraged. you know you have loan, and then on top of it there was leverage and stuff like that. So it's, I think it then, how to say it, like in a very very straightforward manner, is that if we were to have fractional ownership, but this is just one way, right? This is just about ownership. What about people want to say they want to own it and then stay, because that's exactly what happened. People had bought homes, with at whatever percentage at that point in time, keep, because they wanted to stay there. It was not just as an investment opportunity, but as a real utility scenario. I want to buy it and I want to stay there. So how in that sense, would tokenization really work? Because at that point in time, 10 people cannot have a fractional ownership of a house or a property, be it commercial or private, and then one person, like a one family per se or one business is utilizing it.
Yeah, so mainly we are looking at the investment as a utility, not coming and living in the property, right? So, but again, with our platform, with our asset class that is being Airbnb, there is that opportunity for people who are investing. They can also rent those apartments or houses and then stay in those because they are the partial owner. If I invested 100,000 in a $500,000 deal, I own like 20% of the house. So either I can say I don't want rental income from this for 20% of the year. So I can stay in that house for 60 days without paying any rent and without earning any rent because that's my ownership. I don't want to earn rent. I don't want to pay rent. So give me 60 days free, and we are okay and we are open to that. It's one other best utility that we can offer through our Airbnb properties, and it cannot be done with long term rentals because somebody else is already renting for a 6 months or 1 year. It doesn't work for that. Or a multifamily large syndication like 200 door 300 door syndication, it doesn't work. It only works good for short term rental properties.
So
Great.
hospitality industry has a interesting element of allowing investors to also be utilizers. So it's kind of a uh, ownership right along with the utility right.
Correct. Yeah, it is a mixture of a timeshare plus investment vehicle. Either
Hmm.
you choose you want to use it as a timeshare and go and stay there for 60 days, that's up to you. Or you want, okay, I don't want to stay there, let it rent to anybody else. I just want a income. So that's an opportunity here.
Now
Great.
I'll like to take a
Sorry,
bit of a deviation here.
we
Uh,
have a couple of
from a,
questions. Yeah, I think that's where you're going, right, Chang? So we have a question from Christina, who wants
okay.
to know that how do you give confidence to customers or users?
Very interesting
Okay.
question.
Yeah.
Yeah.
So first is all our properties can be looked up in a county office. So at least in US, all the county records are up to date. You can go and look at the county office, who is the owner. Every property is put in a limited liability company, and then the limited liability company name shows up in the county ownership. That's the first confidence. And the second one, when somebody buys, we issue the documentation like private placement memorandum, uh, offering documents, subscription documents, various other documents, and risk involved, rewards involved, business plan. So it's a whole deal room we offer, and then all this can be verified on our website. And then since we are doing Airbnb, The one other last check is you can go to Airbnb and look at this property, and you can even figure out how many times in a year it is rented, what is the potential, how much we are charging per night. It is clear as sky. You can look, okay, we are charging $2,000 a night for a 9 bedroom house, and it is booked 30 days in the month of December. So you know this property earned $60,000. If we as a company did not give that return, you can compare that with Airbnb prices and our returns that we gave to you, and then you can raise a complaint, and that's the confidence we bring to the people. It's all open, and anybody can look at the books.
So,
Fantastic.
Sidhu, here I understand that you have got the processes without a doubt. And I assume this is likewise for all these mature real estate tokenization platforms. But then we have this whole experience of Sam Bankman Fried, who had also got all the processes right in a very similar fashion. And yet, somewhere in the depths, there was this kind of a fraud which some of the most matured investment bankers could not identify. Now, that has created a ripple effect across the world about another level of trustlessness that despite the processes, something is going hanky panky and we can't determine. So, how does a vulnerable investor who's very distant from this kind of a property actually trust the documents what are being provided?
Yeah, one is we trust in US legal system, which is one of the strongest in the world. And secondly, Sam FTX scam, right? It was a token created out of thin air, and there were not processes followed. I would like to correct what you said. There were no processes involved. Everything
Mhm.
was not even audited. The company was not even audited. There were no major banks or somebody auditing that their books. So in our case, we have everything open, right? So we can go to county office, look at the ownership record and who owns this LLC, and then our legal document, our legal counsel can be looked up on the internet, and our legal counsel opinion is also included in our deal room for a given real estate. So we vouch through our legal counsel, and also county itself is providing various other documentation for a real estate.
Mhm.
County in other sense, municipality. If you look at India, it's called municipality. In US, it's called county office.
I think that's a very interesting learning for all the real estate tokenizers based in India as well. Get your documents right and get them aligned with your land registrars.
Correct. Yeah, land registration is something is open to everyone. That's where everybody should do their first due diligence. Look at the county office, and in our website, in a lot of our documents like subscription document as well as in our uh, PPM document, we provide the link to the county office registration itself.
Interesting. I think so.
Yes,
That gives a lot of how do I say it? Clarity and faith, in the users, because this is a new term, right? This is a new way of dealing with, as it is, especially property dealing has not been very, very, how do I say it? Transparent to some extent, right?
Yeah,
So I
yeah.
think with, yeah, with such kind of efforts that you as you're putting in your organization under 3 blocks, that gives a lot of support, because this is what is needed, right? We need a lot of fair play players in the industry to take this forward, right?
Hmm.
Cool. So I have a question, like, so again, coming back from the understanding of how you're putting this together. So can you explain a bit about the co-GP real estate joint venture structure, as you had proposed, right? How is it different from LLP models that we see in India? I'm just trying to make a comparative here.
Okay, so the co-GP model will only be applicable for a multi-family syndications. It is not applicable for a single family homes or a small apartments, right? So multi-family is usually a high ticket item, which runs in 50 million, 100 million, $200 million worth asset classes. So in that, there is already a general partner or a operator who has a history of 10 years or 15 years operating 10 to 15 multifamilies. So we work with only companies who have a history of 10 to 15 years and have syndicated at least 10 properties in the past. And when we work with them, if they are raising 100 million, for example, they go to bank, they raise 50 million from the bank, another 50 million they want to raise from the LP network, liquidity provider network. So they may have some liquidity providers and who may bring up to 30, 40 million. And we as a company, three blocks would bring another remaining portion that is 10 million to this GP. And we take a co-GP position in the same deal. How does that help our investors? When we take a co-GP position, that means our investors have a bigger carry at the exit. So the success rate is better at the exit because general partners usually have a 20 to 30% profit margin at the exit if the property is sold at 5 years. If they sell it at the end of 5 years, they take 20 to 30% of the proceeds as a profit for themselves. In this case, the three blocks being a co-GP, we also get that carry, and our investors, they not only get the promised cash on cash return, promised IRR, they also get the additional profit sharing from the co-GP point of view.
Do you see such models happening in India as well?
In India, they do happen at a larger scale. I
Mhm.
think you can call them JVs, joint ventures. They do that. But as I said, in India, the syndication itself is not that mature enough,
Hmm.
so it is not visible to retail investors. But in US, a lot of co-GP operations happen between syndicators.
I must say that there are a lot of learnings which especially our audience based in India would have from such kind of tokenization platforms, because they are certainly coming with a lot of maturity. And without a doubt, US real estate market is one of the most advanced real estate market across the globe.
That's true.
Oh yes, definitely. So I follow this guy. Like I'm actually a big follower. I consider him my pseudo mentor, called Grant Cardone. Right? You might have heard of him, right, Sidhu? So
Yeah.
he's one of the big real estate moguls based out of US. When I think he's in Tampa. So how do you see such players, getting involved? Because he does deals of, say $500 million, $1 billion of worth of real estate investment every now and then. Like you keep hearing him. So, and there are several others, like that. So how do you see such, big people who are actively into this from an investment point of view, moving to fractional ownership or tokenization for their ventures?
Yeah, Grant Cardone already has a fractional ownership.
Yeah.
Anybody can invest, I think, $1,000, if I remember correctly. Even those investments are open for retail investors as well. So that's one of the largest retail investment platform available in US. So Grant Cardone started a few years ago, and it's been pretty successful. Uh, they are already venturing into tokenization. A lot of the big real estate portfolios, they want to venture into tokenization for the ease of transactions
Mhm.
uh, and the and the transaction cost, right? So on blockchain, transaction costs are pretty negligible if you're on a layer two solutions like Polygon or Optimism or Arbitrum. So these big companies are exploring these opportunities, and I'm sure in next 2 to 5 years, there will be many big players coming into this industry and offering tokenized products to people within US. The best part is when the large companies enter this market, they bring their experience and also they bring their retail investor crowd, which is like 20, 40, 50 million, and that will be a good stepping stone for the whole industry.
Interesting. Yes, that's where things like these will go mainstream when
Yeah.
people will talk around it, right?
Hmm.
Cool. So I have a follow up question. So how would you say that crypto backed under collateralized loans we used to acquire real estate tokens, like from a loan point of view?
Sorry,
You know, so
repeat the question. Yeah.
so I'm saying that how would crypto backed under collateralized loans, will be used to acquire real estate tokens?
We are just using your white paper's references.
Yeah,
Yes,
yeah, yeah. So it's
that's right.
for example, I have a Bitcoin. I bring the Bitcoin. I take a loan against it, and the Bitcoin. Let us talk about wrapped BTC on Polygon, WBTC. That sits in a smart contract, and the loan is issued USDC or USDT. I issue, for example, one BTC $30,000 for ease of transaction, ease of discussion now. $30,000 one Bitcoin, and we issue a 2x loan that is $60,000, and that $60,000 USDT can
Hmm.
only be spent within three blocks ecosystem. It cannot go out, right? So it can be within three blocks ecosystem, and it can only be spent towards buying the real estate. And once the real estate is bought, even the real estate tokens are also they also sit in a same smart contract. Now we have a WBTC and a real estate in the same smart contract. The person who took a loan, he does not have those tokens in the wallet. They only have the uh, tokens which says, okay, you own this, right? So they don't have them, those real estate tokens in the wallet. So it's sitting in a smart contract. As long as I, as a borrower, am giving my interest every month, if I am fulfilling my all the interest obligation every month, Bitcoin will not be liquidated. If I fail to fulfill my obligation, first Bitcoin will be liquidated, whatever that month. If I am supposed to pay $5,000 each month, $5,000 worth Bitcoin will be liquidated. And then until Bitcoin is fully liquidated, all one Bitcoin is liquidated. And then even if I fail to pay the interest, then real estate tokens we start liquidating the real estate tokens itself. So we sell those real estate tokens again in the open market to get that 60,000 back. So in a way, I have $60,000 worth real estate plus one Bitcoin. So totally, I have $90,000 sitting in that smart contract, and that's how we are making sure the lenders are safe and borrower is forced to fulfill their obligation. If they don't do it, they get liquidated.
So that's how you build trust in a trustless world.
Yep, yep. So it's all driven by the code. No human intervention, no emotions involved. Trustless banking.
Interesting. And
So
and I think that's how you kind of reduce the process of claim, like the investment process from 10 minutes to 3 minutes, right? As your
Correct.
white paper says.
Yeah,
So
three
that's
months,
3 months
two
to
three
10
months.
minutes is a claim in your paper.
Yeah, 3 months to 10 minutes. It is true.
Hmm. How is it that happening?
I mean, that's a long time, right? That's a long, long, like time is essentially
3 months
saving
to 10
three
minutes. It's
months.
a huge.
Yeah, yeah. I mean, finding a deal, finding a lawyer, finding a broker,
Mhm.
identifying the deal, moving the money using Swift network, wire, and then receiving the documents over DocuSign, signing those. All that takes a lot of time, 2 3 months for people who want to invest in America. But with the
Mhm.
tokenization platform, they just have to connect to the wallet and then invest without going through all this. Because we have already done all the groundwork. We have worked with a lawyer, we have worked with the broker, we have found the real estate, we have tokenized it. Tokens are available for purchase.
Okay.
So my yeah.
So,
So my next question would have been, sorry, Shank, you want to go? You have something?
yeah, so being a good friend of Sidhu, I also know his views on CBDC. So I was very tempted to ask that while he has mentioned USDT, why not say a CBDC in place of that?
Yeah, USDT is not a CBDT, right?
Yeah. So in case the loans would be issued in terms of CBDC, what's your view out there?
Yeah, it will work something similar. So
Mhm.
CBDC is going to happen, but we don't know how and when it will happen, right? So we don't know how
Mhm.
it would look as well. So would there be a token that can be transferred around the world freely, or would there be a controls around it? And that token may be interoperable across various protocols. We don't know yet. If there is a CBDC which is interoperable and the tokens are transferable around the world, uh, trust me, we will be the first one to adopt it.
Right.
So
Yes,
we
Alec.
are all in for the interoperability. We are all in for the accessibility for the people.
Cool.
Yes, Alec.
Yeah. Yeah, sure. No, so I wanted, my follow-up question was about his journey, like say starting in 2021 to today, where we're sitting that they have multiple properties, and Airbnb seems like a right uh, format to get into from fractionalization, because they can be say 10 owners, and as long as it's a investment opportunity, they can rent it out, right? Because Airbnb has already built a platform where it's famous to kind of rent out properties, right? Like when I've traveled to US, Europe, different places, we've taken Airbnb. So how has the journey been? I'm sure it's not going to be as easy as it sounds right now, but the challenges. What are the core challenges?
Yeah, so the core challenge was first is to usually Airbnb, the biggest challenge is it has a warm up period, right? Any Airbnb that you bring on the market would not start renting on the day one. We have to, as a property management company, we have to grow our own credibility. So if we don't have 4.95, 4.98 rating, we will not be able to rent that efficiently. So we are a super host on Airbnb. Very few people achieve that. We have ratings over 4.95, 4.98 across our real estate, right? So that is the warm up period. We had a challenge to warm up our company as one of the super host and getting the more and more bookings to our own real estate portfolio. That was one of the challenge on Airbnb. Since we are now super host, any new property that we bring in, the warm up period goes low from 6 months to 2 months or 1 month. We will be able to market it better to the renters around US, so they can come in and live in those Airbnbs for a month or 15 days. That was one of the challenge, and other one was definitely the technology itself, choosing the right technology. We have seen a lot of tokenization companies adopting ERC20 tokens, and we are the, I think, one of the very few, maybe two or three out there in the whole world who adopted NFTs. We used ERC1155, and that was a challenge. We had to spend a lot of time figuring out what makes more sense for real estate itself. Okay, ERC20 token makes more sense for private equity and all that, but NFTs are the ones we think makes more sense for real estate, because we are able to put it on OpenSea or wherever and keep the bid open, right, for a week or 2 weeks or 3 weeks for secondary trading. uh, for ERC20, you need to have a market makers. We need to bring the liquidity to the table. Okay, $1 million sitting here, and we have all the real estate tokens. Then they can trade among themselves. But ERC1155, I don't need to bring that liquidity, 1.1 million, 2 million market making liquidity. I can directly trade on OpenSea without having that liquidity. So that's the best part about how we implemented that. We
Yes.
enabled secondary trading.
Yeah, and it's also redistributable, so that's also the
Yeah,
advantage of 1155, right?
correct. And I think other challenges definitely, marketing and distribution is still a challenge because tokenization is so new, and people look at it the way they have experienced FTX, Luna, BlockFi, Celsius, all these scams they have looked, and then they are scared of actual protocols that are building. The real world asset backed protocol is something we were missing until 2020, 2021. But good that 2024, 2025 there will be more real world asset backed protocols will be on the blockchain, and that will definitely help blockchain as an industry to grow further.
Yeah,
So,
it's going to be
Sidhu,
very important, right? Go ahead,
so
Ashant, go ahead.
building in those very same conversations as you have been talking, just to summarize, what has the three blocks experience been for the three properties which we see in today's website, which are all sold out? Like, how has that journey been? How, in terms of technicalities, in terms of raising funds, especially, as you said that yes, the investor management is the biggest challenge.
Yeah, for luckily, we have our global operations. We are just not Three Blocks is just not one company, right? We have our own sister and concern companies who we have import export company. That's one other advantage we have. We are one of the largest importers of countertops and cabinets in Florida, and we have connections in Vietnam, India, Italy, Brazil, and we were able to sell the real estate to our international partners because they have seen our growth in last 10, 15 years across our other businesses. So they trust what we are doing, and we were able to raise money pretty fast. In I would say in couple of months we were able to close the deals, and the deal that we are bringing in November, which is coming, that deal is already closed. We are maybe 10-15% short, but I think we will be able to close that soon too. Even it's not even on the platform, but it's getting sold out. So since we are internationally already connected, our investors are diverse from various countries, and we have a pretty good luck with raising funds for our real estate.
I see you had a recent collaboration with a Dubai based venture as well, which are into the farmlands. And also, how's that kind of a collaboration shaping up the pathway forward?
Yeah, so we are mainly focused on multifamily and single family, right? So we now collaborating with Outside Inc., which is one of the largest forest land and agricultural land tokenization company, which is built on Algorand. So the deals that they bring, we will be able to put them on Polygon network in a joint venture, and we will be able to help people access not only the multifamily and single family. Forest land and agricultural land have a better returns over 10 year 15 years time. They are
Hmm.
not like invest today and start earning tomorrow. They have a different ball game, uh, and those are the assets I think some of the investors might be interested. A lot of the people want to own their American dream, buy a land or a forest land. So that's one thing we want to enable, and let them park the money. And we do know for sure American real estate is not going anywhere. People still want to migrate to America, and there are millions of people applying for visas. So American land is definitely a place to be, and American land is going to be worth much more in the future. Don't take it as a financial advice, it is just my opinion.
So yeah, so I also want to ask that, like on a lighter note, does that help get visas faster for people?
That
On a
question was
lighter note,
running in my mind.
on a very very lighter note, right?
I would suggest to consult your lawyer.
Yeah.
I have no exposure in that industry.
Interesting. Now that was a answered pure like a lawyer yourself, right?
But
I
I
know
have no
people who.
expertise.
let me take Alex's question a little further. Say the people who have already migrated to states. Let's talk about non-resident Indians. Do you see any kind of a potential possibility that they may use platforms, real estate tokenization platforms like Three Blocks or say many others which are coming into place, to plan their own communities, co-living, co-working spaces? Is that a possibility you see in making?
Yeah, it is a possibility. It requires a lot of coordination. It requires NRI community to come together and then join hands to build those co-living spaces, right? So a lot
Hmm.
of the NRI community I know, they have interest in restaurants. They have interest in gas station, interest in building temples, also
Hmm.
many other businesses. So tokenization can help bring these uh, people together and acquire those assets from for as low as couple $1,000 and still own that upside opportunity.
Hmm. So, what's the way forward in the process of democratization of real estates of United States of America?
Yeah, we are getting started, and now we are at a place where we are working towards scaling it. So the future is definitely looking bright.
Hmm.
The one change we have made for our community is we are implementing the referral program. That will be one of the best referral program out there in the crypto community, which takes the guidance from friends.tech, blur.io, various other affiliate networks that we have seen successful affiliate marketing. We are taking the note from those companies and implementing that for our community. And it is about earning the real estate tokens for referral. Right, anybody who refers, they can earn some real estate token for free, and these tokens give you lifetime rental income. So it is not like one time, okay, you referred, I give you $5, done. No, this referral stays with you as long as the property is not sold in the open market. But it is for a long term visionaries who want to build their passive income, and that's where we are going. One is referral program, and other one is point system. We are bringing in the point system. It is just not owning the real estate, building the community. So the more and more community is built out, we hand over the points, and those points in the future will be converted to something tangible. I do not want to disclose too much on that. When I say tangible, it can be a real estate token, it can be a three blocks token itself, it
Hmm.
can be a free vacation nights in our Airbnb portfolio, it can be a some free events that we host, right? So there are various other utilities associated with those points. So I don't want to give out so many things because we are still working on the numbers and finalizing the marketing plan. So yeah, just a gist. It is going to be revolutionary.
Sounds interesting, right, Ashank?
Absolutely, and I'm sure that histories are about to be created. This is a paradigm shift, to be honest, and definitely we will be seeing in coming years lot of traction. And
Yeah.
I must say, to the due credit of Siddu Kadi, that the solution he is building is with a certain kind of a maturity which mature investors
And yeah, I mean, basically, I think his connection got lost.
Yeah.
Yeah, so I think Sidhu, what he's trying to say is, like what you're building is something phenomenal, and it's going to definitely being the early adopter or early into the market. I think it's going to definitely uh, you know, give you the status of the torchbearer, for the tokenization, because it is cross-functional. You coming from India, you understand that local market, and you're going to have a lot of investor base coming from India. How that
Mhm.
turns out, all the best for it. And any last piece of advice, like I think we are around the top of the hour. Probably we can wrap up now as well. So any last piece of advice for people who want to, like coming in, understand more about it, where they can read more about, the, I mean, except the website is, all would obviously be that one piece where we can, have you. So any last piece of advice for the investor community?
Yeah, the last piece of advice I would say, uh, make sure your wallets are secure. That's the
Yep.
only advice I want to give, because everything else we have the opportunity to fix. But if somebody loses their wallets and somebody loses their Bitcoin, and then all that, that is going to be the much more painful for the investor. We as a three blocks platform, we can recover our real estate tokens, but not the your other assets that you have on your wallet. So that's more important, security and learning. Learn more about the crypto industry, tokenization, wallets, before you spend anything on any assets, right? So spend that enough time learning and educating yourself, and go from there. Once this is one industry, once you see it, you can't unsee it. So there is no going back. I have not seen anybody who comes in and ever left the industry. They are always here, who are actually part of DeFi. They stay for a bigger reason and a bigger vision.
Absolutely. Fantastic. On that note, thank you so much, Idhu, for joining in. It's early morning for you, right?
Oh
And
yeah, it's 10:30, so I think
10:30. Yeah, not too early, right?
yeah.
It's good that you join in. Thank you so much. Thanks, Ashang. See you, viewers. with another episode sometime next week. We'll let you know. Stay informed.
Yeah,
See you.
thanks a lot. Thanks a lot. Take care. Bye.
Pleasure. Bye.